I'm from the University of the Philippines and from a movement of informal workers trying to do economic empowerment. My question has to do with the gender aspect of access to credit. And our conclusion after studying 30 years of, let's say, the Beijing Platform for Action, that women's access has not really improved. The big banks are not lending to them. And most of them, because of the unpaid care and domestic work, are actually in nano-enterprises. But I didn't see any gender analysis of who's benefiting from the platform. And you did try to talk about gender-related challenges to credit access, but you did not elaborate. And Coach didn't say anything about women. So I just wanted a sense of what's happening from the...
So on our end, we do nano financing, and I'd say about 90% of our members are women. And actually so I am still actually in the microfinance industry now, but I'm a critic of microfinance now because I think it's really it's the feminization of debt, really. What happens is they target women, and to grow the portfolio of these microfinance institutions is to keep them indebted. It's to grow but my practice on personal finance taught me otherwise. To focus on savings mobilization, teaching them how to do budgeting better, and involving the husbands in the decision-making process so that there's equal responsibility. Because in the Philippines, what people say is, the husband will give the money to the wife, and the wife will manage everything, and then they say that the woman is empowered. But actually, the burden of decision-making and the difficult budgeting process is under the shoulders of the woman already. So that's why we're trying to shift that narrative. And again, the way that we differentiate ourselves from microfinance, and I'm trying to coin a term that's nano financing, because at the bottom of the pyramid, we really cannot just use market-based approaches. The social safety net should be there in times of disasters, in times of sickness, in times of death. And I've already, with our company now, we've given about 37.5 billion pesos already in social safety nets. That's the last slide, I think hindi ko napakita. But 2017 to 2021, the social safety nets that we gave as benefit to our members is even larger than our net income. Which supposedly, income na namin yun eh. Diba? Kaya yaman ko dapat. Pero, sabi ko, no, I need to make these people productive and more economically secure, because if they are more economically secure, they become repeat customers. They're not delinquent members. They would come back, and there's the sustainability part of the business.
Yeah. So, ma'am, we do have a very explicit gender lens. So I'm going to share with you the report that we published last year, which is about the gender financing gap, but for the next stage, not nano and micro, but let's say post-micro, but maybe below small. Yeah. So I think a lot of the data that I shared on my slides are actually all from that report, focused on women. But of course, we can extrapolate to everybody, other early stage businesses as well. What we are saying, and I know, and then as we've also set up a separate network outside of the incubation, so we can provide round the year support called the Nushu Network. And we have about 1,000 plus women entrepreneurs from around the region, not only Philippines. But we are seeing sort of the similar kind of commonalities. I think you're absolutely right. The banks, many of them actually reach out to us to say, we have special products for women entrepreneurs, and please share this in your community. And we do, but I don't know a single woman entrepreneur who's actually unlocked it. Because they have not changed anything about the criteria, right? You're still saying that you have to, be an asset owner, you have to have, collateral of 3 times the value of this loan. And so there are some very specific barriers. And so for us, the blended facility that we have, we are really trying to do non-collateralized, loans, business loans, because so even if you look at the SME lending in the Philippines, a lot of it are personal loans. They're not business loans. It's very interesting. Because when we do due diligence on the companies, we ask for the agreement, and then you see that it's all personal liability. So even though it seems like there are a lot of products, but ultimately people are only lending to the individual, and I think that's also problematic. We have to see, have confidence in the business that women are running. So I think that's one big gap that we do see. On the women entrepreneur side, our data has shown us that actually many of them are just choosing not to fundraise, which is not good also, because actually they have a lot of business opportunities that they can't pursue. So they're kind of getting stuck because they have faced all these no's and so many doors have shut in the face. So they just feel like they just don't have the assets to do it. So I think we have work on both sides, but the people that really haven't moved is the financial system. And so our efforts are really, all of our facility is really committed to fund majority women entrepreneurs, and it's an uphill battle for sure. Because when I first came up with this idea, actually I reached out to the second largest bank in the country, because they were talking a lot about gender. And they said, yes, if you can provide 100% guarantee coverage, we will be giving, we will remove all these. And I was like, okay, then only I am taking risk. You are taking zero risk.
Oh my God.
Yeah, and they were like,
Same.
and then you will not believe the speed at which their board even approved a contract and sent it to me. And I was like, but we haven't even agreed on, these. But, nobody wants to change anything, but are happy to jump on all these bandwagons. So I think we have to also hold them accountable, like those of us who can, who have the agency to do it. So I actually ditched them and I found other people. It took me 3 more years, that means, to actually build. But, I think it was worth it.
In the case of PF, we work with families or households and communities. But we are recognizing the role of women entrepreneurs and women leaders in the social enterprises.
Okay.
Yeah.
Thank you. I think I have time for one more question lang, because after that I have a quick agenda to ask the group for volunteers to lead. Anyway, one more. Any more? Yes, please. Here, introduce yourself and then.
Okay. Usually carry around. Okay, so Richard Baker, collector responsibility. I guess my question actually revolves around risk. All of you made kind of some comments about de-risking, but also let's talk about failure. My general view is we need to fail faster. We need to be taking more risks as investors versus trying to find ways to get investors to kind of feel like they're taking less risk. And I'm wondering what kind of conversations are you having around that? Because my general feeling around most investors who say they have dry powders, they're coming in from out, like kind of your point, like they're coming in from the outside to feel a little bit better about themselves. But if they're setting up an impact fund and there's here to be impactful, fiduciary responsibility should be subservient to that. Like it shouldn't be like, oh, I have to protect my investors. No, your first goal is impact. So what kind of conversations do you have around taking more risk, being more open about failure, so we can have more impact in the long term?
I'll start. PEF is a unique organization because we can take risks. So in our portfolio, our interest income will cover our debts. How you call that? Non-performing or loan losses. So we're good with that. So, but again, like I said, PEF is a different kind of organization. But as we work with SEs, what we are recognizing is one of the risk takers are really the government, and there's opportunity for us to harness, to tap those resources, because their mandate is really development in the communities and in the local economy. So I thought that's it's a one shift in the strategy of PEF to take a look at government. They have high risk profile, and we see some opportunity to complement with government agencies' development work.
Yeah. So for us, we started to converse with investors, the large ones, but the barrier is already there. You didn't even begin the conversation and put forth what you want, but the barrier's already there. You can't proceed. So we shifted, and what we found out is it's easier to let people understand something if they have experienced it before. So that's why we targeted the micro investors, the overseas Filipino workers, who know the Philippines well, what the context is. And when we explain it to them, because these are lived realities for them, it's easier for them to invest rather than the bigger ones. And in fact, I was actually, contemplating, why have I not gotten in touch with you and you?
Yeah.
For PEF, for me, it's because I've been a development associate of PEF, and my ethics would say, baka sabihan akong, development associate yan before dyan. Makikinabang, ganyan. I used to work for the Foundation for Sustainable Society also. It's been 20 years, but I haven't knocked on their doors kasi nga, I've been an employee there, baka sabihan na, may ganun akong feeling. For Vilgrow naman, I think, when we met, sabi niya, I think 7 or 8 years ago, no? And that was the time that we were shifting na from investing to institutions to nano enterprises. Kasi I wanted to see results also. I've been helping a lot of microfinance institutions, but we haven't really seen poverty improve, no? We haven't. So nasaan siya? Even sa amin in what we're doing, and I hope that in the next 5 or 10 years we would be able to say that our nano financing really lifted them out of poverty, not just prevented them from becoming poor. Kasi yun yung thesis ng microfinance ngayon is to prevent the poor from becoming poor, but we want to lift them out of poverty.
Not just like further down.
Yeah.
Yeah. I think, Rich, for us, it's a great question. Like, why is the strategy not like fail fast? I have to say that the risk appetite is like, is the issue locally. Like, I think when I first started out 5 years ago, I actually pitched to almost all, the bigger families, and like somehow like this in between, like, not just charity and not just like, returns based, was quite hard for them to get behind. I think hopefully it's changing. Now there are bigger names like Temasek that are trying to mobilize their capital, and maybe they'll give. Though even Temasek recently said to me that they made the commitment but they're not giving. So I think there is a problem here locally, and I think I'm hoping that USAID and others pulling back hopefully is a wake-up call that Asian philanthropy needs to really step up. And but I don't know if everyone has recognized that, but we're actually going to see a huge fallout in the next 3 to 5 years, where a lot of local organizations in this part of the world that have been funding, because it's actually USAID is the one that's made news, but the Netherlands has just decided, the UK has just decided, Belgium has just decided, Swiss have just decided, they're all going to cut back, and actually Southeast Asia already is their smallest pool and they're going to cut back further. So I think we're going to actually see a huge change. But going back to your question on the risk, honestly, we did try, so that's why we were at the cross, this decision of we just set up our own vehicle, and we decided not to, even though that I feel would have been much easier to do at that point than what we did, and we decided to go with this co-investment sort of lens, because we have to experiment as a market. I think like once Vince is done on his own, like as a group of investors, we have to make some of these bets, and they will not go in. And we've had we've actually had like 8 investments, and 2 of them, because of the pandemic, we actually haven't recovered that money. But everybody is kind of okay because we all went on it together, and we had a bit of the blended financing to kind of de-risk it. But that mentality of let's kind of test and like fail is actually not there. So hence, we've all had to resort to like what are the de-risking mechanisms. Of course, there are a few organizations like PEF and FSSI who are coming from, actually they are blended finance themselves because they come from this grant or this endowment, right? So they had their risk appetite is different, but that's not the case with others. And very interesting on the impact funds, even though impact is not always first, it's, at the best, it's equal to the financial returns. We've not had many, we've had 1 or 2, there's a local organization called Exchange, which is very impact first. But, but they're doing very small number of investments because they are taking a very hands-on, heavy lifting approach. So we've had those kind of experiments. So our bet is that if we invest together and if we can really leverage blended finance, then maybe we'll actually now get some fail fast attitude. I think that's what we have to see.
Yeah, thank you. And I think that last question and your comments provides us with a very nice segue, because I think the last message is, while we still have a long way to go, and I use the word we to refer both to those on the investing side, the financing side, and on the SE side, is that it seems like one of the key takeaways is that we should be talking to each other more, right? Which leads me to one primary agenda, which is a challenge for the group now, no? Because ISEA, as you have noticed, has a number of community of practice groups, no? But they have more been thematic, and part of the agenda of this conference is to also try to test and see if there is interest to have community of practice for this particular group around the whole area of social enterprise financing. And if there is, the challenge also is if there is anyone, we can have a core group first, no, to start the discussion. No real hard commitments first, but if there is serious interest, then the request also for maybe 2 or 3 or 4 groups or organizations to start the discussion, right? And maybe ISEA can provide a little bit of the secretariat support, but certainly will be too stretched to take the lead. And in fact, it's better that it's led by the community itself. So that's my last item on the agenda for today. So may I have some initial reaction, even from from the panelists or from those of you who are here. So your community of practices, in its very simplest form, is just a group of people with a common interest getting together to talk, to share experiences, and to learn from each other. But maybe for starters, we should keep it at that muna, right? And see how it proceeds. But clearly, we already have resource institutions with a whole range of experiences. Ria herself, you have your own exchange group, right? And some of you may be into that already. So maybe I'll just ask, it's easy, show of hands, any non-committal, any interest. If there is a community of practice in social enterprise financing, and I see interest in joining, wow, marami pala. Okay, that's the first screen. Second screen is, may I have some volunteers, even to just get an initial meeting. Commitment only up to the first meeting for informal discussion. The ISEA Secretariat can help you organize. Then you can take it from there. No, nothing muna, because if we raise the bar too much, we will end up everybody going home, nothing happening, right? So my next question is just initial volunteers, to get the discussion started, and maybe just commit to one initial meeting. May I see? Oh, you're not. So can I ask you to sign up with Cindy later?
Okay.
Those willing to be part, no? Even to minimum is just that initial meeting to have a discussion about how to get it going. Then we can take it from there. Oh, good. Sige. So, it'll be very hard to recap, but bottom line is, I guess we have a long way to go. I have several thoughts, but maybe let me end with this, just to highlight the challenge also. I won't name the project, but I'm currently working on a project. Of course, you know how it is. It's agri value chain development. And while we don't strictly label it social enterprise, the target, of course, are smallholder farmers and SMEs. No? And typical in many of these projects with government loan and multilateral loans is there is a matching grant component, right? And of course, the matching grant component cannot be 100% grant because it's enterprise, so they want a counterpart. No? But even with the matching grant, with let's say a 60% grant, 40% counterpart for MSCs, the project is finding it very hard for the proponents to raise the counterpart 40%. No? But because a number of these are tied theoretically to value chain projects where they, in the short term, can probably produce products and sell and then get paid for, there are opportunities for financing. But still, I'm just saying that even if you want to give away money with counterpart, it's still a challenge, no? And I'm just saying that in a sense caps the issue of financing. And the challenges is those who want to lend or to provide have certain criteria, requirements, maybe they don't know enough, they don't want to take the risk. And those naman who need the financing also don't know enough about what the requirements are. And there's really a need to continue to bridge it, right? I'm talking about it in general, but as you hear from Vince and Priya and Gauchi's sharing, is that bridging is really part of it. No? You have to do work on the SE side, and you have to do work on the financing side. And by financing, I include both loans and investments and grants. And it seems like, lastly, we really at this stage, no? Maybe the blended financing is really the way to go. And government has a lot, and not just government, I think some individuals will be willing to put away, risk money but not expect a return. But I guess the challenge is getting all of these together and then starting small, no? The way Korea has started, right? PF's model, of course, is slightly different, but still there's an endowment fund. So I hope the COP can fast track, no? Combine all of these experiences and then move the way forward. But the need is still very large. Okay, so thank you.